Selling your home subject to is a great win for you, your family, and the future of your financial freedom. It allows you to use the bank's money to finance a transaction today to get this burden off your shoulders and allows us to take over those payments today and into the future. Since we're using the bank's money to finance it, it allows us to pay the most for your property, have flexible terms on closing date, cash out, all those kind of aspects. Very flexible because we're going to keep that loan in place and not pay it off right at closing. We've done this with countless number of properties all across Texas and every kind of situation you can imagine. We've seen it all. I'd love to answer questions and explain to you why subject to is the best option to sell your home. There are multiple reasons why subject to is a great answer for you. When we buy the property at the title company, you are done dealing with the property. You are not liable for taxes or insurance on that home moving forward. We're going to pay that every month whenever we pay your escrow and pay the mortgage company. So whatever tenants or future occupants do at the property, you are not tied to that in any kind of risk or liability. At closing, we're going to replace your insurance and put a new policy in place. It has you listed as an additional insured on the property, has us listed, making sure that down the road, if anything were to happen, we're covered, but it's not a policy that you have to cover, pay for. It's not in your name. We are maintaining that. And we send it to the underlying loan, your loan, to make sure that it's approved by them and covered as a part of the escrow, just like the taxes. We will be paying the taxes moving forward on the property every month whenever we make that mortgage payment, filling up the escrow. You're done dealing with the property at closing. You just use the bank's money to finance the transaction. Doesn't make a lot of sense for me to go get a new bank loan to pay off an old bank loan. Only people making money there are the banks. Let's get that money into your pocket instead of theirs. At closing, we sign a deed of trust and a promissory note back to you as the seller. That ensures that we pay that mortgage over time and we pay it out, that we don't just ghost it and start to disappear. We are contractually obligated. We file the deed of trust at the county so that it's on public record and notice that we are going to be taking care of and paying that note. We sign over a deed at closing. We do it all in front of a title company, so it's all by the book. There's even a line on the HUD, the Housing Urban Development Settlement Statement that the government puts out, outlining subject to, because it is a standard process. It used to be done a lot more back in the day. They got away from it, but it's becoming more popular. It really is a transaction that is not a new, unheard of thing. It just hasn't been as popular recently. It's always smart to think about a worst case scenario, what could happen, and have an answer and a plan for it. And that's exactly what we have done on all of our subject to notes. The worst case scenario here is that somehow we go out of business and the tenant or the end buyer occupant of the home were to stop paying their rent or mortgage. That deed of trust that we filed at the county office allows you to take possession of the home and is listed with the realtor and go sell it on the public market. So think about it. 5 years down the road, we've stopped paying on the property. The debt's been paid down for 5 consecutive years, so there's less debt on it. And it's appreciated, gone up in value. So now there's a big equity spread. You get a second bite at that apple. You get another payday and you get the house back and you can resell it. We always say that our worst case is your best case. We work hard not to let that happen. To make that a completely seamless, easy process, we have a deed in lieu of foreclosure signed and notarized and ready to get filed to hand the property back to you so we can quickly get you on your way and get that problem solved. No lender ever does that, but we do to make sure you're well taken care of. It's never going to get to this point because you're going to have ongoing account access to log in every month whenever you want to see those on-time payments made and that debt being paid down. You can imagine the amount of money that we put in each and every property, and we can't allow a single month payment of $1,500 to lose the $30, $40, $50, $80, $100,000 that we've put into a property over time. As I already mentioned, we work with a loan servicing company that deducts from our accounts your mortgage payment to pay them directly. We don't wait for the tenant or the end occupant to go ahead and make their payment. We went ahead and get it paid actually a month in advance. We pay 1 month ahead on our notes, so they're always current, even if our tenant occupier has not paid yet. We never can even allow a $35 late fee to hit us. Run a tight ship, do it right. To make sure we can always pay our outstanding debt, we operate at about a 40% deficiency rate, meaning that 40% of our tenants, our end buyers, our occupiers default, stop paying their rent, we can still cover our underlying debt. 60% of our properties cover 100% of our outstanding debt. Even during the big recession of 2008, the deficiency rates didn't come anywhere near that. So we're over and above to make sure that we can always pay the underlying debt and to keep it current no matter what happens. Typically what we see happen is a few months after closing, it becomes out of sight, out of mind. It's forgotten about until 3 or 4 years, 5, 10 years later, when you maybe want to go get a new home loan. The saying goes that if you can qualify for the new loan without the old one in place, the old one won't prevent you from qualifying for the new one. When that happens, reach out, connect with us or our loan servicing company, because we'll be able to give you the documentation to show a future lender that the property was sold subject to and that we've been making that payment over the interim. All lenders look at credit applications differently, but typically they will look at it with 25 to 30% of the then outstanding balance counts towards your DTI, your debt to income ratio. Most people don't realize you can have as many mortgages in your name as your debt to income ratio will allow. I personally have multiple mortgages that we pay on. They do look at it as that rental and that someone else is paying that debt on your behalf. In all my years of doing this, I've only had one family not be able to qualify for a new loan, but they also weren't paying their car payment. All the stuff that I've been talking about is really important, but it's really not where the risk lies. The actual risk in this whole process is the due on sale clause. The due on sale clause here in Texas says that the lender has the right, not the obligation, the requirement, not that they will. They have the right to call the note due if the property is sold. In all my years of doing this, I've never had a note called due. I've been able to refine, perfect, and build a process to make sure none of the balls get dropped, from setting up correct insurance to how the taxes and the escrow account is set up, to how the lender is engaged with and talked to make sure that they aren't aware of what's going on. Lenders have little to no incentive to ever call a note due when the payments show up on time, the insurance is set up correctly, taxes are being dealt with, and the property is being handled. If they do ever decide to move that direction, we'll team up again and we'll get the problem solved. There are a lot of different answers to it depending on the unique circumstances of what we're dealing with. There's always an answer, but that's the only time the credit becomes a risk or things become an issue. Our plan is to never tell the lender the property was sold. That's why we get a power of attorney and we deal with them directly. Just like working with a doctor or an attorney, experience matters. And this is where we excel and outpace all of our competition. Been doing it longer, with more properties, to handle more situations than anybody else. And our experience ensures that it goes smooth from now until the note is paid off. These are obviously a lot of great details and information to help you out with it. There's more things that we can discuss and answer specific questions when we jump on a phone call. Some things we can't discuss in a public forum, so please do reach out, ask additional questions. Let's make sure we're all on the same page so that we can really go through how this process works. Look forward to setting a time to chat about it. Talk soon. Thank you.